Good morning, everyone. Welcome, welcome. Welcome to the tradingsyndicate.org. I'm JJ, and this is our morning session for Tuesday, the 17th, St. Patrick's Day. Hey, Seth, how you doing? Welcome, folks on YouTube. Buenos dias. Hey, Stealth, Marcus, Felix, what's going on? How you guys doing? So, contract rollover is going well. 254,000 contracts in the new 145 left straggling in the old. That'll go to zero as the week progresses. And somebody was asking me this morning, do you need to have market profile to trade? And you don't. I think market profile is maybe 3% of the people out there have even heard of it. The nice thing about it is really quickly when you look at profile, you can see really quickly, you go, hey, look, the inventory was here, sold here, put on sale, so you can see the path of the inventory. And now it's being sold up here. So if you're a short seller and you're looking for a short, you're looking to come back to cost basis, which is under 67.50. If we take out yesterday's high, we're going to take this, and we're going to try and sell it up here at 67.95, 6,800. It's a cool thing. You know, profile, when it's presented traditionally, and I'm not knocking the traditional people, they're how I learned. They don't use it really in a practical way. I like to take profile, and there's maybe two or three things from profile that are very handy. One of them is called a poor low, right? Where you could see buying competition, or a poor high where you could see selling competition. Another thing is to see where the cost basis of the inventory is very quickly, right? And the other thing is what we have this morning, which are single prints. So we have two sets of single prints. And what the stats guys say is this is a distribution, this tiny thing is a distribution, and this is a distribution. So we have three distributions separated by two sets of single prints. You're like, okay, JJ, that's great, but how the hell do I use that to make money? Well, what it's telling you is there are people trapped short under 67.65, and there are people trapped short under 67.50. So if you were shorting, say, when the market opens and you think, okay, we're going to correct back down, and you shorted 70, 71, 72, you put your stop over 75, 76. When you get down to 65, you're going to expect buyers here, and you're going to expect buyers here. So these will be places to cover, and that's how you could use that information intelligently. See, like there's a big area where the shorts got trapped. And there's an actual business reason why they're trapped there, because anyone who was shorting in the overnight session was using 52 as a stop. So the large traders are short here. When the market ran that 52, they're all sitting there racing to cover. And then when the second half hour bar opened, it took out the high. Well, we've got another short position. So you'll see as the market comes back down, when it comes down to 71 and a quarter, you'll see that there'll be a little bit of buying. If it can't get down to 71 and a quarter, it will rotate up and the target to the upside will be yesterday's high. So this way you can manage your expectations when you're in a trade. So that's the map of the city, okay? Now let's go into that area here between 76 and 78. Let's go and take a look and see what it's like in that neighborhood. So you can see that, hey, check it out. The position's underneath 36. We took it and we sold it between 36 and 48. And the people who shorted it here and averaged up here, when they went to cover, everybody who was long under 50 just raised the price. And now they're making them pay 78 for it and higher, you see? These are the stragglers. These are the last people who are short. The old contract, they're coming in to cover, and they're getting hurt a little bit here. So what are we going to do for the open? Let's see. When we get to yesterday's high, there is a good probability or a good chance that they'll sell into it here. And if we retrace back down, your first target will be this 74 area. You can see it here. You see this? That and this are the exact same thing. So while you don't have to have market profile, it's really nice because it really quickly tells you, the larger sort of map of the city very clearly. Right? And you know where to look for buyers and you know where to look for sellers. Right? But nothing you can't mimic with a half-hour candle chart. Okay? So let's see what we do here. It's funny, my junk mail inbox is nothing but trading stuff. Huh. Fascinating. So those of you who are looking for a short back down, it's tempting, right? It's tempting to short, but we want to identify that there's a seller. We want to make sure that there's a seller before you go putting money to work in a short. Like right now, I don't see a seller. Now, how can I say that? You see how the offer or the ask, the red line, it keeps moving higher. That is an indication that the sellers are seeing buyers and they're raising price. Yesterday the seller was at 84.50. Thank you, Moran. So Moran says around 84 and a half there were sellers yesterday, which means they'll probably sell there again today. Right now they're right there at 79 and 3/4, 80. Well, they saw buyers. Look at that. See, this is why I don't see a short just yet. What I want to see in a short is when the market goes up and then the candles start putting in lower highs. That means the sellers are putting it on sale. So if we had that happen, the first area that I'd be putting buy orders would be sort of 75, and then down here at 72, and then down here at 66. Right? No problem, Ayo. How you doing? No worries. So that's what I'm looking for. You know, I'm looking to see sellers desperate to get rid of their product. And what that means is they'll start putting price on sale. Okay. So how do you trade this? Let's see. So we got two red candles. So say, for example, you are short. Say you're a fast trader. And as soon as you saw that offer move from 81 down to 80, boom, you're short 80, right? So if you're short here, I'd use this as your stop. And then I'd go and put some buy orders here just at 77, 77 and a half. And if you can't get filled, what does it mean to get filled? It means if I put a buy order at 77, say I'm short 80, and I go to buy a contract at 77 or 77 and a half, and I don't get executed, that means that nobody needs to sell it that cheap. So when they don't need to sell it that cheap, it means I got to pay more, right? Which is a pain. That's why you get this green candle that you're seeing. Yo, hey, LC. Man, it's good to see you. LC has been with me since the beginning. He's taken about a year off because they've got him working on some heavy duty computer stuff where he can't talk to the rest of the world. He is literally in the 0 and 1 mafia, the guys who keep us from getting hacked. So it's good to have him back. Oh no, you're sick. Yeah, there is a flu going around, brother. There is a flu going around. Good to see you. When he has time, LC is one of the educators in the room. It's just lately he's been super busy, as people with talent are. Yeah, LC's been with me for a long time now. Okay, and we can't, short sellers can't get any love here this morning These are just people buying in or getting bought in for the contract rollover, right? You really, really don't want to be short going into the new contract. You know how they say old business, new business? So the next place I'm looking for sellers, Moran said 84 and a half, and I think that is definitely an area. There is a seller on the half hour candle at 84 and a half. And then the next one is up at 86, 87, and then we're looking at 67.92. I'll show you what I'm looking at here. Oh, that's cool. So there we are. We're gunning for that previous day high. Hey, hola, Luis. Thanks. Gracias. 67 shorting at 67.62? Well, brother, we're 20 points above it. Um, so maybe when we get down there, I don't know. I won't be able to tell until we get down there. What I'm kind of looking for now is a short where we look above and fail the previous day high. Yeah, it's a good thing if you watch that level, Louise, and then we're going to have to watch and see how price behaves when we get there. 67.62 is right where those single prints are. So if you want, maybe tell me why you're thinking 62. I mean, if you have a reason, then definitely watch it. See, now we're taking out that overnight high, yesterday's high, so we're going to be running some stops. So that's going to be forced buying, which is very inconvenient for our short sellers. So I'm looking at 92 and a half as the next level up. If we take out, sorry, 67.87 and then 67.92. Hey, Mike, how you doing? Welcome, folks on YouTube. Good morning. So this is all forced buying, my friends. Forced buying. And the area, if we get up to 68.10, 68.10 and a half, that's what I'm really interested in because they have, I'll show you what I'm talking about, sorry. On this half hour chart, you could see there's 87, there's 92. There's that 68.10. And if you noticed, we had sellers there for 1 half hour, 2, 3, 4. So for 2 hours, they sold into that level. So that's an area that I'll be really looking at. Right? Short selling is going to be a little hard right now because everyone's buying. Right? But the reason why I'm talking about short selling is every time a market moves higher, everybody is induced to short it. Everybody wants to short, and it's something we have to watch out for. My target was 67.88 and 3/4. So the new contract is just shy by 1 tick. So it's not bad. This 67.88 3/4 level, that level is a level from 2020. So that level is 6 years old. Right? Actually now it's March, April. So that's when I found those levels down at 27.49. So this is the doubling and doubling and doubling of that big balance zone. And you can see that even 6 years later, the levels work within 25 cents, within a tick. Not bad. That's not me being brilliant. It's just that the market is so well calculated, and the folks who run the algorithms that write the code, it's just so precise, you know. It's just such a precise, beautiful thing. So now, how do I get my levels? Well, if you come into the room, I'll show you. And Fazro, I've done about 400 videos on YouTube. So I show you guys how to do the levels. Probably you haven't seen them, but what I do is I just go and I look for back and forth. So you see these highs and then these lows here? This would be a cost basis. It's a distribution cost basis, but if you double it to the downside, I bet you'd come down to 36. It's very simple. Two-sided trade creates a cost basis. A cost basis is the most important thing for a trader to understand in the market he's trading so he can price his goods accordingly, right? So you know how sometimes you go to look at something, like some guy's selling a car and it's like a 1982 Chevy Citation and he wants like 25 grand for it, and you're like, buddy, you're delusional. This is like a $400 car, right? So that's what we're trying to do. We're trying to price our inventory so we can sell it, right? Yeah, those COVID levels, they've been working, man. We've got people who are making like 7, 8 figures off of those levels. The crowd that buys thousands of contracts. The look below and fail is just, and the thing is, that's the same trade. The look below and fail is the same trade on a 1 minute candle here as a daily level. You just, once you get skill, you just scale up, right? You just scale up. Now let's see if we could take out, oh, there we go. Just took 88 and 3/4. Now, is this a look above and fail, or is this a look above and go? Let's see. I forgot this, and actually everybody forgot because nobody's been talking about it. Tomorrow's a Fed day, you know that, eh? With all the drama that's been going on, we kind of forgot about the Fed. So I have no idea what the heck they're going to do. I'm not a Fed watcher. So I don't know if they're going to keep rates the same or if they're going to lower rates, or I have no idea what they're going to do. So usually Fed days are pretty mellow, like pre-Fed days are very slow. But there is a good amount of short covering in the new contract. Let's see. New contract 283,000, old one 158. So if we open up here, my friends, we're going to open on a gap. Hey, Jam, what's up? Yeah, there's going to be support down there at yesterday's high because all the shorts are trapped under there and they'll all be bid to cover. So now let's see, do we stay above 88 and 3/4 or do we come back down? If you are shorting, right? Like for example, right? Why am I talking about shorting? Because every time the market goes up, everybody wants to short it. So I'll talk about shorting. If you are short, your stop's going to be 92, and your danger zone, like in Top Gun, is going to be 88. So if the market starts offering above 88, then you know you're in trouble, right? Pretty simple. So you could sell 85, 88 and a half. You could sell, but as soon as it starts offering 89 quarter, 90, right? They're turning up the heat a little bit, right? So say I'm short a couple of contracts at 88 and change. I'm going to put in a bid at 86 and 3/4 and cover one, cover two. I'm short 88 and a quarter on these contracts. And I've got my buy stops in at 86 half and 86 and 3/4. And it's just a couple of micros. And I'm just going to cover in the 86s and I'm flat before the open. So I told you guys that's the trade I was taking, was shorting underneath 88, stop. To be truthful, my stop wasn't at 92, it was at 90. I didn't want to take too much heat on it, right? But that is shorting the backfill, right? And I'm perfectly happy to short 88 and cover 86 on 3 or 4 contracts just to dip my toes, just put your toes in the pool and see what the temperature of the water is, right? I'm not going to make, private jet payments off of that trade. But what I do is I test to see whether or not, first of all, is my brain working? Because sometimes you come up with ideas. Do you guys ever see that episode of Billions where they take the limitless pill and they're like, let's do this. Oh yeah, that's a great idea. And they all go piling into this trade. And then somebody goes, are you guys like stoned? Like, sometimes you'll come up with these great ideas, but they don't really work. So that's why you should test them with small size or a smaller contract, right? It's true, right? I mean, we're all human, and I'm not saying I'm any better than you guys. I've come up with some stupid ideas in my life, right? But if you go full hog, right, and put all your money into it, probably not the best idea. So we did open on a gap, and we just filled the gap. Okay? So let's see if we accept underneath yesterday's high. That's the trade I'm looking for. And once again, I'm watching 88 and 3/4. Right? I'm okay being short under 88 and 3/4. But if this thing gets up over 88 and 3/4, I don't really want to be short. How desperate are the short sellers? See, if I was short 86, 87, once it starts clipping over the 88s, my goose is now getting a little cooked, right? So luckily they stepped in and started selling into that overnight high, but once they take that overnight high, I could be in trouble. I could easily get into trouble here. So that's how I watch that. We tested the bid pre-market. Let's see if that 84/4 bid is still there. I would prefer to get short if we get underneath yesterday's high. You can screw around in here, but you might get cut up a little bit. As you could tell, I'm an overly cautious trader, right? I'm cautious because I've seen people lose a couple of $1 million in a morning just through making really stupid decisions, right? So when you've seen that, you're kind of like, you know, see, look there, that's what I was talking about. See, this is the thing, you know. So now if you're long, right? The next area that we're looking at is that 6,800, 6,810. So if you buy a couple at 93, 94, sell them into this. What did I get? I got 94 and I'm out at 98. And that makes up for me screwing up and shorting it down here at 90 and covering at 92. You've got a lot of people short coming into cover. We did fill the gap, but you notice we only got about 6 ticks into yesterday's range, and kaboom, the shorts came just rushing into cover. So for me now, because I took a short and I got my whiskers burned a little bit, I'll look for a look above and fail of 68.08, which will be 8 times cost basis. So 8 times profit. Hey, Juan. Hola. How's San Diego? When I miss a fill at 92, I try not to chase Pollux. But if it's a fast market and a big candle, I might just try and grab the offer. But if I miss the trade at 92 and I grab the offer at 94, I'll put a sell order in at 96 so fast it'll make your head spin. Because when a product is in motion, right? You know you're an ex-market maker. So you know when the market is in motion, you've got to be quick. I like to wait for it to come back. Sometimes you miss trades doing that, but you got to be okay with it. I don't mind missing a trade, right? I don't mind missing a trade because I'd rather be miss the train than be under the wheels of it. You know what I mean? So, and I'm always like, oh, there's going to be another trade because I've been around for like decades, right? I'm a fossil, right? So I'm so old that you don't really care if you miss trades. You're like, yeah, big deal, right? So let's see, where are we going to find support? These breakouts are kind of hard to trade. So I'm kind of doing a little experiment with half-hour candles and volume profile. And if we can hold the 92s, I think we can go up to 68.08. You know, after a while, those trades are... I was going to use an analogy, but it's politically incorrect, so I can't. Let me find another analogy. Um, you'll get used to it. You just get used to it. You know? Just like you get used to being wrong. See a little more distribution here? I know, I got to watch out. Everyone's so sensitive now. Okay, all right. 6,800. Do we accept above 6,800 or below? What do you guys think? So what's going through my head is how short are they? Because if they're really short, we'll go over 6,800 and we'll stay over 6,800. Hey Martin, how are you? Yeah, there are sellers there at 6,800. I'm very short biased, so I might as well say it out loud. I'm not in a trade, and I'm not thinking of one right here. But I am biased to the downside. Now let's see if my bias is correct or not. And I'm still trading small because yesterday and today are the first 2 days that I'm dancing with this new contract. So until I get to really know it, I'll keep my size and contract small. I really don't care about making money. I care about understanding and making good business decisions. So okay, so there was a seller at 6,800 down to 96. That's okay. Now let's see, can we get down to the 93, 94 level? I'd say if you were looking at a short and over the next couple of candles here, if we can't accept above 6,800, do you see how the sellers were here and then they moved down here? And now they're down at 69, 67.99 quarter, seeing a few buyers and they're raising price, but the sellers stepped in again. You see? Sellers stepped in again. So if you're fading that move, right? Say you're short 97. Your warning level, danger zone's just under 6,800. And if it starts taking out the top of that candle and going up to 6, there, see? That's what I was afraid of. Give it a little bit more time. Let them do a distribution here. So it's been 1, 2, 3, 4, 5, 6, 7 minutes. I bet you if I go long, it'll fall apart. Just kidding. If you are long, just use the levels to put your orders out. Like save your long 6,800, 6,801, sell a little at 2, sell a little at 3. Make sure your orders are out, my friends, so you can take advantage of the buying. Always sell into strength, folks. Always sell into strength, right? So if you go long, like say 1, sell a little at 2.5. Make sales, right? You can't pay the bills unless you sell your product. Especially when you're trading the highs and you're going long, right? So you could see that, yeah, that round number thing, jam, back and forth over 6,800. I don't see a long yet. If we take out 96 and a quarter, then the people who are long above 96 and a quarter, they're going to get a little pissy and start puking down to 92. So let's see what happens next. Just give it a bit of time. Right, this is distribution. Right, so those of you who are asking how you draw a cost basis, this is a distribution cost basis here. Back and forth, back and forth. That's what we use. Right, these are little cost basis areas. And so when the market retraces, they're going to retrace back to those cost basis areas. The good thing is, Jam, if we take out 6,800, there's a lot of bids down to 67.92. Unless you get a really big seller come in. Right? And you have to remember, too, don't forget that once we're over 67.92, pretty much all of the inventory for the last, up until the 12th, is underneath us. Check it out. So you see all of the inventory is underneath us. So even if we retrace, it'll come back to this area here, right? Yeah, it's a little hard to see it when you're on a phone in the office. So this 6810, I'm really focused on that because they sold into it for an hour and a half up there. If we clear these three upper levels, target is 6852. Now, I'm not saying that's going to happen today or even in the morning, but if there are enough people trapped short, you you guys, folks, you've seen this market do some crazy things. If you get enough people trapped short, this thing could just rip. Yeah, it's kind of walking up like stumbling up the stairs, right, Dave? It's in this tight distribution. And for folks, if you're like, oh, it's not clear, don't worry, it'll become more clear. If we take out 96, you'll be able to short it down to like 94, 93, right? We're starting to put some volume up here. So if we don't get a move over 6804, 6805, these people are going to get a little, they're like a quarterback in the pocket. They're going to get happy feet and start coming out of their position. Let's see. So far, everyone's still happy, but we're only 15 minutes in, right? We're still in Act 1. We're still in Act 1. Act 1, Scene 1. Hey, Elsie, just remember, you get a private jet. Don't forget about us, okay? Let's see if that four seller is still there. Oh, here we go. Here we go. Can we go tickle that 8.25? Close. There's 8.25, 8.5. Now, is it an automatic short? Because we're at 8 times cost basis? Eh, not just yet for me. Right, so if you are shorting this, say you're early, right, and you want to short this at 6, 7, well, your stop's at 8.75, okay? So if you're short and it accepts over 8.75, be careful, right? Where would you put your buy orders? You're going to want to put your buy orders down here at 5, 5.5. And if you get down there and they can't take you, uh-oh, you know the drill, right? You know the drill. We got a seller at 7. Can we get him down to 5.5? Say you're short 6. Well, there we go. 6.5, 6 3/4. Not the greatest trade. There are some buyers right here. Remember, we built a position here. So the market will come down to that position, stop, and then rotate higher. They can only do that if when we put it on sale, it attracts buyers. You see how the buyers are coming in? But we do have sellers right at 8 times cost basis. So let's let the large traders work this out. I'm looking for that 68.10 area. Was it 10.5, 10.25? 10.5. Another little distribution. Distribution's hard to trade. Trading distribution is not easy. So a lot of the times I sit and wait until distribution starts becoming a sale. You know? I want to trade when I want to short it when I can see that they're putting those $1,000 shoes on sale. It starts creeping. They start creeping them lower, 900, 800, 600, 700, right? So we can go short a little bit. 6808 is working. Now let's see if we can get down to 4. Can we print the 4s? Can we transact at 4, 4.25, 4.5? Not just yet. Still taking some time. Here we go. We're going to try it again. Remember, price doesn't go down unless it has to go down. A lot of you guys won't understand what that means, and that's okay. It has to go down when you compete with other sellers. Because if you own inventory and you're not selling it and being competitive, the other sellers are taking your client. Look, there's the 4. There you go. So those who are short 7 against 8, you're covering a little bit at 3 and 4. You're looking for bids at 2, 2.5. Right? If we accept over 4 again, you know that sell order is complete. Right? Now let's see if they sell into it again. Now watch when this candle closes in 6-7 seconds, we're going to see where the next candle opens. And the high of that candle, if it stays under 4, you're okay if you're short. If it starts creeping up, it's a bit of a pain in the butt. Once again, trading at the high of a market, whether you're going long or short, you really want to be taking the short. But do you see how we came back into these cost basis areas? Right? So if you were short here and you didn't cover here, now it's eating into your profits. We need that seller to be there at 6, 7. So if you're short here, say I'm shorting a few in the 4 area, 4, 5. My warning level is here, the top of this candle. So I'm short 4.25 on a couple. I'm going to put some bids in. And if we start accepting, see, I'm short 4.25. I got bids in at 2.75 and 2.5. And I covered 2 of those. And I've got 1 left. And I'm flat at 2.25. right? So when the point of control moves up, it means that we're making good sales, Rocky. So do you see how I kind of tore apart that trade? I wanted to short it up here, but I was hesitant. So when I saw this, this is where I took that short. And then when this candle opened under, now I remember I have my buy orders in as soon as I take that short. So when the market falls, I can grab that cheap supply quickly. That's like you're standing in line to get some, I don't know, what it is that you guys like to buy, and it goes on sale, and you guys all rush in, and the first people get the cheapest stuff. It's the same thing, right? And that's what we want to do when we're trading. We want to make sure that we get the cheap goods. Bargain hunters. So now do we stay under this white line? See? Distribution, distribution, sale. And if we take out 96, then we take everything from Saks Fifth Avenue. Then we go to Bloomingdale's. Do these stores still even open? I don't know. And then once down at Bloomingdale's, if it doesn't sell there, we go all the way back to TK Maxx, right? You get the max for the minimum down at VWAP. See, it's just shopping. It's the same thing. If you visualize it, it kind of helps. I was talking to somebody from Seattle this morning, so I could use Nordstrom's, right? VWAP is Nordstrom Rack, right? And up here, that's like the high-end shopping place at Nordstrom, right? All this is, folks, is a sales chart. We're making good sales up here. We've got these poor short sellers. They're trapped all over the bloody place. Look at that. We got 3 sets of single prints in the overnight profile. Look at that. 3 distinct, very large short positions. So is it any wonder that the price is kind of staying up here over 6,800? We are going to sell everything, including the kitchen sink up here, right? Because that's what business is about, making sales. Yeah, unfortunately, someone's always unhappy in this business. Hey, nice work, Fish. Well done, brother. So right now, I'm not trading because it's kind of slow and creepy. So I want to wait. I'm going to let the large traders distribute. I don't know, Kevin. Three's the magic number, Cesar. Because the first sale, when you go long with three, the first sale is your information trade. The first sale is, okay, there's a buyer at the area that I'm looking at. And then the other two are profit. Now let's see if we can get under. See this little white line where we've been stopping? If I went and drew, maybe this will help visualize. If I just go and draw a little volume profile here, you'll see how there's a big chunk of volume here. And that's why we stop, and that brings in buyers. You see? Did you trade for Meyer Blinder back in Denver? No, that's before my time. But I traded for a lot of people who worked there and cut their teeth there and who bribed judges from there. Sorry, Denver. Denver's hey, there's never a dull moment in Denver, man. No, I never traded for Meyer Blinder. That was before my time. That was a legendary criminal penny stock firm that he's talking about. We had one guy who was a broker at Meyer Blinder, and this guy was horrible, man. He he used to come to Canada, and he and this other lawyer, they were just they were both from Denver, and they used to say, "Oh, we love Canada because they don't throw you in jail for writing bad checks." And I was like, "Okay, I'm not taking you on as a client. You're gonna get me thrown in jail." No, I draw the line. He stole two Range Rovers that way. Not just one, but two. That's Meyer Blinder in Denver. Those guys, they have like, they're like sociopaths. It was like a school for high functioning sociopaths. Let's see if we can get under 80, ladies and gentlemen. Oh, that annoying 80-81 bid. Hey, look at that. Still there. Here we go. Now remember, if you are in a short, well, they're Range Rovers, so they always break down, truth. You got to have one to drive while the other one's in the garage getting fixed. So if you take out 67.98, look for bids down here at 92.93. Okay, friends? Let's see. But I want to see sellers at 6,800. I've got to see those sellers. Show yourself. Right? As they say in France, montre-toi misérable. Right? Show yourself, you sellers. So if you're shorting here, there's going to be some bids down just under 97 and 3/4. Right? 97 and 3/4, 98. And hopefully we've trapped enough people so if you're shorting that 6,800, your danger zone is 6,801. Okay? Now this is where they've been bidding the market for the last hour, half hour, so those bids still might be there. They're really trapped here. They're front running it until they see a size seller, then they'll drop their buy orders down. See, it's unnaturally sticky here. Right? Annoyingly sticky. So I shorted 99 and a quarter, and I've got to stop at 6,800 and a quarter, 6,800 half. And I'm bid at 97 and three quarters, and I can't get any at 97 and three quarter. Come on, so there we go. Finally, let's see if I can get some at 97. Yep, covering 97. And I got one left with a 99 and a quarter. I'm just following the stop down like a dog. There, I'm flat. See how long it took before it broke? It literally took almost an hour, basically 45 minutes, to build up and trap enough poor people over 6,800 that they start to sell. Then the people who are long under 67.91, they compete with them because they can sell it all the way back down to here, right? They can sell it all the way back down to here and still be in profit. But the poor people that they jammed into this, right? They're all now they're getting like seasick, right? And they're all puking out. So let's see now of 67.92, which is the overnight high. Let's see what the bids are like there. Right? So this is tactical trading. Every trade has a business reason. So when you're wrong, that's okay. You can be wrong. See, I shorted a little here at 6,800 and I covered, and I finally got my act together when they started selling that 68.08 against 68.10. So it finally, right, I wasn't on the ball really. And I only got on the ball when it came, once the market had been open for about half an hour, right? Hey, Josh, what's going on? And that happens sometimes. Sometimes you got stuff on your mind. Sometimes you're not executing well. It's going to happen. That's why I trade micros until my brain is working. So if I'm trading micros and I'm getting stopped out a little too much, or I'm making bad decisions, or then I know, okay, don't trade mini, right? Don't trade mini until you have your act together. Hopefully that makes sense. Today, this week, folks, Wednesday, we are going to have our execution class in the room. Now, when do you want to do the size trader class? I guess it's too late to do it today. And I don't really have anything prepared. So do you guys want to do it on Thursday? Because Fridays, everyone's just wiped out by Friday. Right? I'd like to do it on Friday, Attila, but nobody pays attention. By Friday, everyone's burnt out. Don't worry, it'll be recorded. Okay, so 11 o'clock tomorrow we have execution class, and 11 o'clock Thursday we have Daddy Warbucks class, which is size traders. Welcome to the room, Paul. See how we couldn't get down to that 90? See, we couldn't get down to that overnight high. See how they stopped short? That's because between the overnight high and 93 half, there's a bunch of buy orders, and they came rushing in to buy it. They front ran that level. Think and grow rich, right, Jam? Little Napoleon Hill. Excuse me. Ugh. I swear to God, living in this building, there's like a new cold bug every week because we get so many travelers. It's brutal. Okay, sellers at 99. I'm still short biased. There better not be mold. Pollux, the building's only 3 years old. But it wouldn't be, in Vancouver it would have mold. You always imagine, no, I live in a really tall, well, for Liverpool building, and there are a lot of students in it, which is really cool because I'm like the oldest dude in here. I have taken 3 look above and fails and 1 look below and fail. 2 of the shorts stopped out instantly, kind of deterring me from being short. There you go, Nathan. See, you're learning from your bad trades or the trades that don't work out, right? It's like a business lesson, right? Now I'm 58 years old, and everybody I hang out with is like under 30. So I don't mind. I like being around young people. It keeps me from becoming a grouchy old man. Which, to be fair, most of my friends back in Canada have become grouchy. So I do have my moments, though. Like this morning on YouTube, I do have a bit of a short fuse. Hey, Arkroy, how you doing? What's up, Neela? How are you doing? Welcome, folks. Welcome, welcome. The wholesale traders are having a beautiful time. Anyone who is long under 67.70, they are going to be very happy campers selling in the 90s here. You coach high school tennis? Oh, that's cool. I remember my parents made me take tennis lessons when I was a little kid. It was not a good scene. So, oh man, I was horrible. I was really bad. This thing is taking forever to get down to the overnight high. And how many people shorted this market in the overnight? Holy cow. Somebody asked me that. Have I ever considered using volume bars instead of time-based bars? Is that like a tick chart? Because somebody was talking about tick charts earlier this morning. Oh, here we go. We're coming down to 92. Mihai, I'd give it a shot. I just don't know how to do it. I'd be curious to see what it looks like. I wouldn't dismiss it until I've tried it. I just don't know how. I'm very simple when it comes to trading. Yeah, Gorilla is not really a tennis player's name. There we go. Finally. So those shorts. See, there's that 92 gem that we were looking for. Finally tagged it. Now let's see what happens. If we can get under 88, if we can get under 67.88. Oh, thanks, Rudu. Yeah, we'll definitely do that later. Yeah, I'm curious to see what they look like. You guys have all the cool toys, right? You have all the cool toys. there's going to be a little short covering before the open. And that's what you're seeing right now. If you're short, you can stay short if we stay under the overnight high. If we reclaim the overnight high, be careful. But you should be okay shorting down to the open, right? Just remember, the overnight high is, as they say in Top Gun, or if you're a fan of Archer, that's the danger zone, okay? So you're okay. Oh, so there's a difference between volume charts and tick charts? Oh, you guys have a lot of toys. Right? So as long as you're underneath the overnight high, you're okay being short because that means they have to sell underneath 92. Once they see buyers and start raising price, that's when you want to get nervous. But we've sold a lot of product over 92, which means there should be some resistance from all these people who are trapped long. Watch the overnight high now. As we mosey on up to that overnight high at 92, there should be a seller here. So if you're selling that overnight high, your stop is just above it. Ah, nice work, Travis. Did you see that kid score that goal in hockey? It's all over Twitter. Pretty amazing. So if you're short like 89.90, put in an 88 and 3/4 bid and an 88 and a quarter bid. See if you can get some product. Just down here. Now remember, the shorts are trapped under 83. Oh, oh, cool. Thank you. See how what I'm talking about when you find a seller? See, there's the seller at 92. So if you're short under 92, you're okay. But if we lose that seller, that's like you lose your backup in a barroom fight. Right? So I was short 89 and 3/4, and I'm just going to take him back here at 87. Ooh, 86. I got a better fill. Right? So that's why your seller, if that seller goes away, then price will go back up. So that's why you could take those trades as long as that seller is still there. Right? I use that example all the time because when I was a bouncer, I'd see some guy, he'd mouth off some guy because he had a tough friend, and they're ready to square off, and the tough guy friend sees a girl and he starts chatting up the girl and he disappears and the guy is standing there going, "Uh-oh." So we came back, tagged the previous day high, found a bid. Is the war over? No, Howard. It's a short squeeze because of contract rollover, right? Okay, S notes. Well, you don't have to watch, right? I told I'm not putting I'm putting you in timeout, man. You could just go somewhere else. Leave us alone, right? If people don't like the way I'm teaching, they don't have to watch. I'm trying to help you guys, and I'm not a guru or a furu. So, so now you'll be looking for bids at 67.83. Right? Is everyone okay with this? You guys okay? Right? These are free streams. So, if people are complaining, so that's okay. I had this guy he was on me this morning. So he just follows me to, talk shit. So Big distribution, right? I don't have the cure for stupid. Obviously, he's got nothing better to do with his time. So there's that previous day high. There's the bid. Right? And now those shorts that were bid, they're dropping their buy orders. Right? So we're filling this set of single prints. So after a distribution, now we're going to put it on sale and we're looking for VWAP. Yeah, Howard, it's just short covering into the new contract. That's all it is. Market is working perfectly. Very tradable. Very tradable. If we clear the overnight if we clear the open and get back over 88, the next trade I would be looking at is a look above and fail of the overnight high, where I'd be looking to sell 91 and 90, stop 92. Because they sold there before, they should sell again, and your risk is not going to be very high. You're selling if it looks above and comes back in, or if it fails to take out the overnight high. Everybody get that? They didn't quite get up to 90 and a quarter. Alrighty. So remember, tomorrow, folks, we will have at 11 o'clock, we'll have our execution class. And Thursday at 11 o'clock, if you join the room, we have a free trial for 3 days. Give it a shot. If you don't like it, you don't have to stick around, right? Worst case scenario, you'll learn something and you'll make some money, right? Worst case scenario. uh, there's that 92 short. You see? I was joking around, but there I should have been short 91. I didn't take the trade. But I called that trade out 2 minutes ago. I said you're shorting 91, your stop is the overnight high, and you want to put some bids down here in the 88s, make 3-4 points. That's the trade. Right? So I called that out. I didn't take it because I was joking around and I wasn't on the ball. I hope some of you got that. Now, if you're still short and it starts offering 92, 93, 94, be careful. Because your next seller is here at 94.5. If you lose that particular seller, the next seller is all the way up at 98. So if we reclaim the overnight high and get accepted over 93, 94, be careful. As long as that 92 seller is there, you're okay on the short side. Nice work, Truth. Nice work. We need to take out that 89. There we go. Come on. And if you're still short, put some bids at 88. See if you can get some product. They're gonna lift the offer here. Watch this candle and watch the top of this candle. If this candle now can stay under 90, you can still be short, but you'll be looking for bids down here at 87, 86 and a half. I anchor my VWAP, Frankie, I use 23-hour VWAP, which is anchored at the beginning of the 6 p.m. New York session. Um, I don't. I like Brian Shannon and I love anchored VWAP, but the problem with me is you start anchoring it all over the place, and I just need one VWAP for my purposes, right? So I know that 23-hour VWAP is here at 72, 73, and that's what most firms use, and most traders, their VWAP's automatically anchored at the 23-hour session open. So it's just simpler for me. The less stuff I have on a screen, for me, the better. Now watch out if we start accepting over that overnight high because the lows are getting higher. Let's see what happens in the next candle. That seller's still there. Seller is still there. Now you're looking for just, see the bottom of this candle here? 80. There you go. Beautiful if you're short. Exactly, Cesar. Right? So the top of the candle is where you and I and Paul would try and sell and compete. So Paul, what does it mean to put in bids? That means limit buy orders. Right? So the top of the candle is where everyone competes. So you have 5, 10, 15, 20, 100 sellers trying to get the best price, right? To capture the buying. If they see competition, they lower prices, right? Just like a store, right? I will not be undersold. Remember? It's the same thing. So that's why you mark the top of the candle. So say if you were long here, you know that there's going to be a seller up here. Does that make sense? So the top of the candle is where they start selling. The bottom of the candle is where they stop. Now, why would they stop selling? Because they see buyers under 84 and they want them to pay more. That's okay, Nathan. Shake it off. Come back tomorrow. You know, it's like It's like Tom Petty said, some days are diamonds, some days are rocks, right? We all have bad days. Go shake it off, take it easy, right? Ah, how do you apply it when shorting? Beautiful question. So what you do is, say you identify that there's a seller here, Cesar, right? There's a seller here and they move down. So say you're shorting 91, 92, you use 92 half as your warning level and your stop is at 93. So you're short, warning level, stop. And then you go and you put your buy orders down here because you know that's where they stopped selling before, right? Of course you're going to be horrible at it. If I asked you, if you've never played the piano, and I asked you to sit down and play the Moonlight Sonata, or if I gave you a violin and you've never played the violin, and I said, okay, I want you to play, the Sibelius Violin Concerto, it's going to sound like you're torturing an animal, right? It's the same thing with trading. It's just a skill that is built on repetition. That's all. Don't worry about it. There's no magic to trading. All it is repetition of the same thing over and over and over and over again. So it becomes like breathing. Once you understand what to look at, and that's what we teach, once you understand what to look at, we teach you how to execute around what you're seeing, right? So it makes sense and we train you. Okay? Stick with it, brother. Don't worry. And thank you, everyone. Appreciate you guys. Have a wonderful day. Come visit us at Trading Syndicate. We'll teach you how to make a living. No gurus, just hard work. It's not rocket science, folks. It's just repetition. Right? Every day we come in and we make the donuts. Okay? Thanks, everyone. Trade safe out there. Be good. Stay out of trouble. And we will see you tomorrow morning, bright and early. Bye for now.